You see it everywhere online, right? This hype around high-frequency trading. And maybe the most tempting promise of all is the 1-minute strategy. The idea that you can spot a trade, jump in, and get out with profit, all in 60 seconds. Well, today, we're going to pull back the curtain and break down exactly how one of these popular strategies is supposed to work. I mean, it's an incredible question, isn't it? The thought of making a profitable trade in less time than it takes to make a cup of coffee, that's the dream. That's what gets people so interested. So let's really get into it. How is this supposed to work? What are the actual rules? And just as important, what are the risks?
So for this breakdown, we're using a specific video from the YouTube channel Katie Tutorials as our guide. Our goal here is super simple. We're just going to lay out the method exactly as they present it. The tools, the signals, the warnings, we're sticking only to what the creators shared in their video. Okay, let's dive right into the mechanics. This entire strategy is really built on a very specific setup. It uses 3 key indicators on a 1-minute chart. And getting this part right, well, that's the foundation for literally everything else that follows. The first tool in the toolbox is called the Index of Oscillation. The easiest way to think about this one is as your confirmation tool. Its main job is to measure the momentum, or the strength, behind a price move. It helps you see if a trade has some real juice behind it. The second tool is the ALMA, which stands for Arnault-Legault Moving Average. Now, the key thing to know about the ALMA is that it was designed to be much faster and more responsive than your typical moving averages, which can sometimes lag behind the price. And obviously, for a 1-minute strategy, that kind of speed is a huge deal. And here's where it gets interesting. The strategy doesn't just use one ALMA. Nope, it uses 2 of them right on top of each other on the same chart. Each one is set to a different time period. And it's how these 2 lines interact, how they cross, that creates the main signal to trade. Okay, so you're going to want to pay close attention here, because according to the creator, these exact numbers are everything. For that index of oscillation, the period is set to 2, with levels at 59.8 and 36.2. Then you have your 2 ALMs. The first one, the white line, has a period of 7. The second one, the yellow line, is set to 12. These specific values are basically the secret sauce. They're non-negotiable for the system to work as described. So once you've got your chart all set up with those exact numbers, what's next? Well, the next piece of the puzzle is learning how to actually read the signals. The creator lays out a very clear 2-step process for spotting a potential trade. First, you're on the lookout for the ALMA crossover. This is your primary alert, right? It's that moment when the fast white line crosses either over or under the slower yellow line. But, and this is key, you don't trade on that alone. Step 2 is you absolutely have to get confirmation from the index of oscillation to make sure the signal is legit. You know what's really striking here is just how mechanical and black and white these rules are. There's no room for guessing. For a sell signal, 2 things must happen at the exact same time. The white ALMA line has to cross below the yellow one, and the blue line on the oscillator needs to be above its green line. For a buy signal, it's the perfect opposite. White crosses above yellow, and the blue oscillator line is below its green. If both conditions aren't met, there's no trade. Simple as that. And this quote from the creator, it just perfectly sums up the whole philosophy. The strategy isn't about trusting just one indicator. Its supposed power comes from what traders call confluence, that perfect moment when all the different signals line up and point in the exact same direction. All right, so that's the theory. But how does this actually look when the rubber meets the road? Well, the creator walks through a live session, and I think it's really important that we look at both the wins and the moments where things definitely did not go to plan. The creator shows these moments where everything just clicks. They claim that when all the market conditions are just right, it's possible to string together multiple winning trades in a row, just like this quote says. But, and this is a really big but, the creator is also very direct about the fact that losses are just part of the game. They don't try to sell this as some kind of magic bullet. And to prove that point, the demonstration actually includes a trade that went completely sideways. In this moment of taking a big risk, they come right out and say that a trade went wrong and resulted in a pretty significant loss. And that right there is just a raw reminder of the financial risk that's always on the table with this kind of fast-paced trading. The $1,000. Just seeing the number by itself like that, it kind of makes the risk feel a lot more tangible than just talking about it, you know? It really drives home the point that every single trade has a very real potential downside. In this case, a pretty substantial one. And that loss brings us to what might be the most crucial part of this whole strategy, the warnings. Beyond all the rules and signals, the creator gives some really important limitations that you absolutely have to know to get the full picture.
First and foremost, they state this crystal clear. This method is not foolproof. It's not 100%. There is absolutely no guarantee of a win on any given trade, and losing is an expected, accepted part of the whole process. So here's a quick rundown of the key limitations they mentioned. First, as we just saw, it is not a 100% winning system. Second, all those indicator settings are specifically for 1-minute charts. They say you shouldn't use them on any other time frame. Third, this method reportedly does not work for OTC or over-the-counter markets. And finally, and this one might be the most important, there's a huge piece of psychological advice. Know when to stop and rest your mind so you can avoid letting your emotions run the show. And all of this really leads to a final, bigger question. As we break down these really mechanical, rule-based systems, you have to wonder, is the goal to find some kind of perfect strategy? Or, as the creator's own warnings seem to suggest, is the real secret to trading not found on the charts at all, but in discipline and emotional control? Definitely something to think about. Thanks for digging into this one with me.